Hello everyone. Credit markets performed strongly during November for several reasons. The release of lower than expected US inflation figures, a change in the posture of central banks and a less hawkish tone than before, overall good quarterly results, and the easing of several measures by China regarding its zero-COVID policy. The investment-grade segment performed very well, supported by the fall in sovereign rates and the tightening of credit spreads. The primary market remains extremely dynamic, allowing investors to position themselves on quality issuers with attractive premiums compared to the secondary market, which remains illiquid. We maintain a constructive view on the investment-grade segment, which we believe will benefit from positive flows in the coming weeks due to still attractive valuations, especially in the Eurozone and in the banking sector. On the other hand, we are staying away from the real estate sector, where we expect a significant deterioration in fundamentals on top of short-term debt maturities that need to be refinanced. The higher segment also rebounded, especially in the Eurozone, with risk premiums tightening by close to 70 basis points compared to only 10 basis points in the US. The absence of primary market and the gradual return of investors in the asset class in a context of deteriorating liquidity explain, in our opinion, this rebound, which we consider to be technical. In the short term, we believe that this trend could continue, but we remain cautious about the asset class as we believe that high-yield risk premiums do not include the risk of recession. As a result, we maintain a preference for BBs, the highest rated segment, as well as for defensive sectors that are less sensitive to the macroeconomic environment deterioration. In line with the investment-grade market, the primary market for subordinated debt remained dynamic, with several cocoa bond issues, including Deutsche Bank 10% in euros and BNP 9.25% in USD. On the subject of early redemptions, we note the decision of the Portuguese bank BCP not to call its Tier 2 2027 subordinated debt at the first call date. BCP bonds did not react to this announcement, implying that investors were already anticipating this announcement. In terms of positioning, we maintain a positive bias on the asset class, especially compared to high-yield corporate. We believe that the risk of no early redemption is now well understood by investors. In conclusion, we believe that the credit rebound could last until the end of 2022, due to the return of investors' appetite for fixed income in the context of deteriorating liquidity. As a result, we take a constructive short-term view on credit with a preference for investment-grade credit, which we believe offers the most favorable risk-reward ratio. Thank you for your attention. The entire La Française and I wish you a happy holiday season.